Awesome. All right, everybody. Thank you for joining us. Good afternoon, good evening, depending on where you might be sitting from for today's webinar. My name is Carlos Medina, pronouns he, him, his, a Learning Services Manager at San Diego Grantmakers. And I wanted to welcome you to Philanthropy California's webinar, How to Talk to Your Financial Advisor About Impact Investing. I'll be starting us off today reviewing a few housekeeping elements. And so just to get things started, throughout the webinar, feel free to type any questions that you have based on the content that's being shared on the bottom of the screen. You'll see a chat box there, and we will do our best to interweave those questions throughout today's conversations. Second, I wanted to share with folks that today's webinar will be recorded, and a link of the recording will be provided to all attendees in a follow-up email. And finally, I wanted to share that at the end of today's webinar, we will have an evaluation poll posted. And I want to thank you in advance for taking just a minute or two to complete that evaluation poll, because San Diego Grantmakers very much values your input, and we will use that feedback to improve future programming. So with that said, and housekeeping out of the way, I would like to hand things over to Robert Foster, Director of Impact Investments at San Diego Grantmakers, to get us started today.
Good afternoon, everyone, and thank you for being here. On behalf of Philanthropy California, I wanted to thank all of you for joining us today to further your journey in impact investing. We all do great work at Philanthropy California, aligning our capital with our mission. And impact investing, as we've talked about in the last few events of this series, is just another tool in your toolkit as change makers to further your missions. Now, for those of you that are familiar entirely with Philanthropy California, you might be coming at this from Northern California Grantmakers or Southern California Grantmakers. It's the trifecta of Southern California Grantmakers, Northern California Grantmakers, and San Diego Grantmakers, soon to be name changed to Catalyst, I might add, that constitutes Philanthropy California. And I want to thank our partners at Northern California and Southern California Grantmakers for being so prescient as to think about impact investing and have it programmed at this critical stage of our nation's transformation. Many of you experienced that impact investing could feel a bit daunting. There's a lot of terms, a lot of jargon, and a lot of different ideas that float around. In some ways, it's sort of like sustainability. It has a lot of different meanings to a lot of different people. And at Philanthropy California, we believe that through collaboration and shared learning through peers like Ron and Monique, who will be presenting today, we can demystify the jargon, explain the core components, and in the process, build a better future for California. Now, we're excited about all the work we've been doing with Philanthropy California and impact investing. The impact investing collaborative that we started already has $100 million committed to it. And it demonstrates both the interest and the power of this group to make change happen. Now, as I alluded to earlier, today you're going to hear from both Monique Aiken from Mission Investors Exchange and Ron Cortez. Now, Monique is a thought leader in impact investing. She has worked at Tideline, the Clinton Foundation, and even in the corporate world at Deutsche Bank. So she really gets both the hard discipline side of the bank's viewpoints, as well as how to think skillfully about engaging mission and capital together to create durable outcomes. Ron, many of you have heard of Ron before. Ron Cortez, he's been a luminary, I might say, in the world of impact investing, and he's unique for today's conversation as we talk about portfolio activation, and you'll hear all about what that means in a minute. Because when he was at Asset Management as the founder and owner, he had over 30 billion under management. So he understands the viewpoint of financial advisors. And what Ron did is he shifted the corpus of his personal foundation to be completely activated for impact. And we'll get into the details of that later, but it's a unique viewpoint and a unique perspective. And also you're getting that from both Monique and Ron, who are two fabulous human beings. So now more than ever, throughout our country, we need solutions, and those solutions require both philanthropic and investment capital. So by aligning those two today, we are going to be able to learn how to do that more effectively and learn to engage both internally within our organizations and externally to do it faster, smarter, and better. Now, before we kick off with Monique and Ron, allow me to introduce one of our key partners in this initiative, one of the thought leaders behind the collaborative that we've put together, Catherine Bennett from RBC Global. Catherine?
Thank you, Robert. Thank you, Monique and Ron, for being supportive of the initiative and all of the conversations that will help us get to the power that we can generate together. And thank you, everybody, for joining us here today. We have this little number at the bottom of our screen, which tells us that there are more and more people clicking in every minute. So that's always exciting to see grow. Thank you, Robert, and San Diego Grantmakers for putting this on and the platform they deliver. For those of us who do that on a regular basis, we know that is no simple task. And also to your partners in Philanthropy California, Northern California Grantmakers and Southern California Grantmakers, as you've already mentioned. Robert, thank you for your leadership role in raising awareness for impact investing and the ability to geographically target those investments. We at RBC have been dedicated to place-based impact investing for underserved communities and families for over a decade. The timing of Philanthropy California could not be better, or unfortunately in some ways more important. Through this global pandemic, we have learned that we often need local solutions as regional needs and even regulations vary. This collaboration came at a time when the large needs only grew. Expanding awareness for the power of adding investment dollars to geometrically, I'm going to underscore that, geometrically increase the impact of the grant dollars addressing the societal issues you care about has never been more essential. RBC Global Asset Management considers it a real privilege to be a part of this collaboration. Recently, we have seen the power of working together on so many fronts. And I see Philanthropy California as an inspiration and call to action within RBC, as well as across our client base. We launched the first investment collaboration for Philanthropy California at the end of September with around $100 million, as Robert has said. And we hope that this will grow and accelerate both in and of itself and in helping awareness for impact investing as a model across the country. Several California-based foundations have led the way, including San Francisco Foundation and Weingart Foundation, who have offered to be a resource as fellow members of these grant-making organizations work their way through this journey. The conversation for this partnership between RBC and Philanthropy California started almost a year ago, and I don't think any of us would have imagined the effectiveness of the partnership, nor how important it would be for the unprecedented events of 2020. One of the reasons we are having this conversation about advisors today is that they can be critically important to advancing your impact investing practice. And finding the right partner aligned with your values can be key. What you have all achieved in forming Philanthropy California Impact Investing Collaborative is a landmark for the impact investing movement. And with that size comes the ability to both mobilize and raise awareness. Thank you all for being here and for dedicating your energies to learn about aligning your capital with your values and to providing your leadership to this discussion. Today, we have the privilege of gaining insights from Ron Cortez, who will be guided through the discussion on how to talk to your financial advisor about impact investing by Monique Aiken. Monique and I met early in my impact investing days. We were introduced by a dear friend and former colleague. When he heard what I was doing, he insisted I call Monique immediately. And it really was love at first sight. Ron Cortez is the co-founder of the Cortez Foundation. Among so many other things, he continues to be one of the people we all look up to. His leadership as an early adopter and innovator in this space cannot be minimized. And with that, I pass the baton to Monique at Mission Investors Exchange.
Well, thank you so much for that kind introduction, Catherine. The feeling is mutual. And thanks to Robert and the rest of the team for coordinating. I'm delighted to be here with all of you. And to pile on the accolades onto Ron, I too celebrate your leadership in the field. And you've been a bright light to many. I've seen you, of course, on many panel discussions and sharing generously with your time in many other forums to just help others along the way. So we appreciate that about you and your approach to sharing in your journey. So as we start this conversation, perhaps we can reflect a little bit for those who are new to you and being introduced to you today for the first time. If you could share a little bit about how you got here in terms of your impact investing practice as described by Robert earlier. You're a storied financial industry leader with, billions under your belt in the traditional, as they say, legacy finance, and you turned your own work towards impact investing. So there must have been some aha moments along that way and perhaps some advisors who helped you get to where you are now. So can you share a little bit about your story?
Sure, thank you. Well, Monique and Catherine and Robert, thank you all. It's delightful to be here. Always really interested and fun to share kind of the story of impact investing and evangelize. So let me just start with a little bit of background to kind of give you a feeling for the window that I came into this from. So middle-class kid, first in my family to attend college, graduated with a lot of student debt on a Friday, started a job on a Monday, and that job happened to be as an independent financial advisor. And over about a decade and a half, two partners and I started a firm. We started our own investment firm, ultimately working, as Catherine kindly said, with significant assets under management, several thousand financial advisors that we worked with. By the time I reached my mid-40s, I was looking to do something else. I wasn't sure what. We engineered the sale of our firm to a global insurance company. My wife, Marty, and I did something that we'd always wanted to do. We created a family foundation and began to realize very quickly that when you create a family foundation, you get lots of advice. And the advice we got, this was 2006, was all very conventional and very consistent. It was, well, this is how foundations work. You make as much money as you can in however legal way you can do it. Don't concern yourself with that side of the equation. And every year, as that corpus in the foundation grows, you can give 5% or more away to the causes that you care about. So as we went into 2006, having sold the business, created our foundation, I think we were envisioning ourselves as philanthropists. And while that is what we do today, and while we're very proud of our grantee partners and the grants budget that we run, focused on issues like global economic empowerment, the role of women and girls in the world, and gender lens, I've found that I've gone back into the investment world kind of full circle, and particularly working with financial advisors in a marvelous coincidence that I never would have originally expected. And I would say that our journey in impact investing, I joke that it came from a combination of frustration and opportunity. On the frustration side, we don't have unlimited corpus in our foundation. We have a rather modest resource compared to many others. And so I joke that we're not the Gates Foundation. We have several less zeros in our balance sheet. So there were big problems that we wanted to affect, and affecting them off of just 5% of our corpus just was frustrating to us. So we started to ask our advisors, how could we activate the other 95%? And well, at the same time, we began to meet these amazing social entrepreneurs and fund managers coming out of the traditional investing world that were presenting me with that we're really looking for an investment out of the 95%. So we literally spent about 6 months trying to make that happen. And some of you in the audience have probably received similar advice, maybe over the years, to what we got. We got advice like, you can't invest that way. You'll risk losing your charitable exemption. That isn't the way foundations work. You just don't get it. And so we finally decided, 3 sets of advisors and counsel later, that we found a team that was willing to get us to yes. And at the end of 2007, we made the decision with our board to move 20% of our corpus over the next 12 months into what at the time we called social enterprise investments, because the term impact investing didn't really yet exist. And I remember one comment that my wife and I made to our board that kind of stuck with us through 2008. We said, this is a new field. we may lose some money here, but if we do, let's learn, let's do it as field builders, and let's do it in a way that we can help others down this path in the future. So we went out, it was the wild, wild west. There was no infrastructure at all. There were no consulting firms. There was no research. There was no databases. We hired a couple of young MBA interns. We put them on Google and we said, let's get some deal flow and let's figure out who's out there. And through attending and participating in a lot of the early conferences and events, we started to cobble some things together. We were very proud of ourselves. By August of 2008, we had actually invested the 20% of our portfolio. And obviously, as we all know, a month later, the financial world imploded. And our first concern, amongst many at the time, was how, you know, that comment that we made back to our board in December of the prior year, how are these impact or social enterprise investments going to fare in performance as compared to the rest of our portfolio? So everything was private. 20% was private investment, so it wasn't going to be marked to market really until the end of the third quarter, and most notably not till the end of 2008 when things kind of settled down. So we were going to have to wait a while to figure out if those investments had actually performed. So before I tell you the answer to that question, one of the things about impact investing that's really become powerful for me is it's this combination of heart and head. I came at it really from the head side. And one of my favorite lines is the longest journey in the world is the 12 inches from here to here. And I came at it with my investing background, very focused on the impact that we wanted to have, but looking at this kind of financial first. Who were the portfolio managers? What was their track record? How were these investments put together? What did the business model look like? And in November of 2008, in the midst of the financial crisis, I had an opportunity to take a group to Africa. And we ended up amongst many other places in a small village in Uganda where we funded the early seed funding for a microfinance program. Microfinance being an area that we'd invested in, we were passionate about. And we were the first outside funders to visit this little village called Bayubo, about 5.5 miles outside of Kampala in Uganda. And as we walked through this village, we were meeting the 40 women whom we had helped fund the very first microfinance loans for this initiative called Women's Microfinance Initiative, which today has 12,000 borrowers, is totally self-sufficient, and works across 4 countries. But back in 2008, it was a fledgling program. And these women were incredibly excited, as you might imagine, sharing their businesses with us, how they had invested the 100, 200, 300 they'd received in microloans. And I'll never forget, there's one woman, her name is Florence Maduku, who did not speak English. She spoke the native tribal language of Luau, but she kept tugging at my shoulder and that of an interpreter because there was something really important that she wanted to share on behalf of the other women. And so when we got to her business, which was a business that bought and resold used clothing, she said to me something that I've never forgotten. What she said was, we appreciate when you, people from the US, come to Africa to save our children, but we need to save our own children. Thank you for investing in us so we can do that. And that still gives me chills when I think about it, because the relationship that Florence and I had at that very moment was not a supplicant relationship. It was not about me giving her something or her taking something. She was basically saying, you've made an investment in me. I'm going to pay that investment back. Thank you for having the confidence to do that. And I came away, Mark Twain has a great quote, the 2 most important days of your life, the day you're born, the day you find out why. November 1st of 2008 was that second day for me. And I came back to the US in the midst of a historic election that had occurred that very week in 2008, in the midst of a lot of hope in the US. At the same time, we were still in a horrible financial crisis. And I thought to myself, how could I be engaged beyond our balance sheet in making a difference for 1 million Florence Madukus? How could we do something at scale? And as I started to think through that, the one nagging question as we got to the end of 2008 was, does this really work? What is my impact portfolio, our impact portfolio in the foundation, going to look like relative to our conventional investments? And wouldn't you know, and as I've said a lot in my TED Talk and other places, not only was that 20% not the worst performing in the portfolio, it was actually the best. Across debt and equity, largely almost completely uncorrelated with the devastation that had happened in the global financial markets in all of the developed countries. And so I came away with both the heart and the head energized. And beginning in 2009, we moved our portfolio from 20 to 30 to 40 by 2014. And since, we've now activated, as Robert and Catherine mentioned, 100% of our foundation portfolio and much of our family office portfolio as assets become liquid and available. We're putting in to impact. But at the same time, I recognize that our balance sheet was small, and how could I attach to larger balance sheets, and how could I try to build some infrastructure for this space? So since then, I've been engaged in a couple of different initiatives, two that I'll mention that I think are germane for this group. One is a donor advised fund called Impact Assets, which I was involved in founding in 2010. We've got this amazing team. We have about $1.2 billion in assets today. And the idea was, for those that were not yet in a position perhaps to create their own family foundation, how could we use the donor advised fund structure as a way to empower people to both give and invest? So at Impact Assets, you can give money away in the same way you can at Vanguard or Fidelity or Schwab or any community foundation, but you can also invest that 95% or whatever other percent of your corpus you don't give away in funds and individual investments. We've had over 200 new investments bubble up just in 2020 alone from our donor advised fund clients. So it's a way to really democratize the field. And then secondly, I began to realize that this field that I've been in for 30 years, financial advisors, they are the gatekeepers, and they were keeping those gates closed. Mm-hmm. And there are a number of reasons for it, and I know we'll get into it a little bit in a subsequent question, but one of the things that I realized was there was a real need for a specialized advisor who could work alongside a client's traditional advisors and help that client build both a strategy and an implementation to manage, to get into impact and kind of mold their portfolio along with their values. So that firm is called Align Impact Advisors. We are a client. I am a board member. We're one of about 50 families today, comprising almost $2 billion of assets under deployment, that are taking the position that we want to take a leadership role. We want to combine our values and our portfolios, and we want to combine our community. We want to combine deal flow. We want to combine resources in a way that can make all of us more effective, irrespective of what our issue areas are. So we're domestic, we're global, we're across nearly all of, if not all of the SDGs. And the concept being that impact investing has to really start with what moves the needle for you. And what are the problems in the world that you're really passionate about solving? Now, how can an advisor help you actually clarify what those problems are and then identify what the solutions are that are available across the public and private markets to try to do that? So that's been the journey. It's in addition, I've taken on this role that I joke is the pro bono evangelist for impact investing. I love doing events like this. I love the fact that we've got this incredible community of people who care about important problems in the world, who have taken it upon themselves as people of resources to become solution providers and to learn about the problems and find ways to solve them. And so I'm just excited to be part of this group. So thank you, Robert and Carlos, for the invitation. Thank you, Catherine. And Monique, I'm a big fan, I've always been, of your work. And so it's delightful to have the opportunity to share a conversation with you.
No, it's so powerful to hear your story and those moving moments. You know, the second that you know what you were here for is just so powerful. And I think really is the energy that can continue to drive you for those frustrating moments that I'm sure you've also had along the way, since you mentioned, you know, talking to a number of advisors until you found the one that got you to the yes, that was able to be responsive to you. So as you think about that particular aspect of your journey, you know, what do you wish you knew at the beginning, maybe with the first advisor and you know, however long it took you to get through those three to the right one? Certainly, I think your work with Aligned Impact must be instructive in many ways, but For the folks on the line, what can you share with them that you wish you knew then, or maybe at the earlier part of your journey as the infrastructure evolved to meet needs?
Oh, thank you. I would say I've really come to appreciate two things. One is that old paradigms die hard. And there's an old paradigm that has been in the investment business for years, which is that you do good over here and you do well over here. So it really separates philanthropy and investing. And this concept of double bottom line, this concept that you can actually invest in a way that has impact while not sacrificing returns, has been an acquired taste for many. And even though we have now more than 10 years of data, particularly across the public markets in ESG, demonstrating that this is not just this is a long-term phenomena that's happening, many advisors have still just not paid enough attention to it to really appreciate it. So that's one. And the second is that I've come to appreciate how hard it is to drive change through large organizations. So most advisors today are part of a much larger organization, whether it's a bank like Merrill Lynch or Morgan Stanley, or a private bank like Bessemer, Northern Trust, or even the networks of independent financial advisors still have they have limitations as far as the new products and services that they can offer, and compliance departments, et cetera. And so I found that things have moved more slowly than perhaps I had first envisioned. When I got started in this 10, 12 years ago, I really thought that the industry was going to move forward more. Now, as I step back and look at 2020, at all the media attention impact investing has gotten, the dollars that are flowing, I realize that the glass is indeed half full. It just perhaps is not filled up as quickly as I'd first imagined. And I think the one piece of advice that I've started to give to asset owners is that whether it's an individual advisor or a large firm, the only way that change happens is by clients raising their hands and making it known what it is that they're interested in. And I think it comes down to, as a client, you need to have the clarity to understand what it is that you want, and the confidence to know that it can be available. And so that's where I consider kind of my role as someone who's done it before with our own portfolio and others, saying this is possible to do. And even though you might receive no as an answer, it is possible to find a yes, and there are resources available out there. The one final comment is, for years, advisors have shared with me and shared with clients that, well, gosh, I'd love to move in this direction, but I've got a fiduciary duty to you as a client to make you as much money as you can, and I'm concerned that this impact investing thing conflicts with that. And my thought was, first of all, well, two things. One, I think they're wrong about the trade-off, and I think that data is becoming more and more apparent. But secondly, they've got the concept of fiduciary duty just wrong. A fiduciary duty is to the client to act at all times in their best interests. So who determines the best interest of the client? It's the client. And I think that clients and asset owners sometimes don't appreciate that they are, in fact, in the driver's seat. And I've had advisors say, well, you can't do this because it's not in your investment policy statement. And I've said to clients, well, whose investment policy statement is it? And why can't that investment policy statement be changed? And in fact, you can put whatever you'd like in your investment policy statement, and it's up to the advisor to decide whether he or she is willing to adhere to that. And so I'm finding now that clients are starting to become empowered, that they want to move in this direction. And a lot of the big firms are starting to do some good things. They're starting slowly. And I think the biggest disconnect right now is not, I want an impact investment and the firm isn't willing to offer any. It's the difference between the firm coming to the client, many of the major banks, and saying, good news, you want an impact investment, here's what we got, right? We've got something for you. And the client saying, well, it's great that that's an impact investment, but these are the things I care about. And that investment really doesn't speak to those things in the way that I want it to be spoken to. And it's really hard for the major firms to match that bespoke interest because they're not designed to do that, which is why I think firms like Align, and there are several, have come into this field to say, we're not there to replace your team. Many clients have said, geez, I love my wealth manager, you know, insurance, tax, estate planning. Gosh, I don't want to unwind a 20-year relationship, but I'm no longer willing to put impact off to the side because my private bank isn't able to get there yet. So firms like Align are able to step in aside the client, work together with the rest of their team. And often it starts with strategy. Where do you want to move the needle? And then how can we help you do it? And then how do we take that impact strategy and combine it with whatever else you're doing to make it all fit together? And that, it's been really gratifying for me because I've seen both the assets that it's moved, the good that those assets are doing in the communities in which they're invested. And I think I've also importantly seen the family legacies that it's beginning to build, the conversations between, you know, adult parents and adult children and young children and next gens, and just families coming together and building a legacy and deciding what it is they care about. And next gens particularly becoming much more involved in investment meetings and investment decisions than they might otherwise have been before, because now all of a sudden these investments really have a meaning to them that goes beyond all of these concepts that they would generally just let slide by when their investment manager was presenting to the family. So I think there's so many different things that are working out positively here that it's been exciting to be at the forefront of the movement. And again, I look forward to that glass having a few more drips in it every day as it continues to fill.
And you mentioned strategy as such a key element when we think about the array of options. You know, you talked about ESG in public markets, private markets. Robert mentioned, you know, it's daunting, the jargon, and it can be mystifying to some. You know, you can think about ways to activate all kinds of different capital. CDFIs might be someplace that one could start. You mentioned direct investing in social enterprises earlier in your journey. So when folks are thinking through what to activate and when, and perhaps that strategy discussion really plays in here, where do people, new entrants particularly, go to find out how to go about getting to the first step?
Until I really became associated with Align, and Align was founded by this remarkable woman named Jennifer Kenning and the team that she's built, I didn't fully appreciate strategy, Monique, because we kind of built our own strategy school of hard knocks as we kind of, you know, built out our portfolio. But the way I've now come to appreciate it is much like building a home. If you decide you want to build a home, you don't start off by finding a contractor, ordering some lumber, clearing some trees and saying, build. You start off by stepping back with an architect and saying, what do we want this home to be? What do we want this home to accomplish? What do we want the rooms to look like? Once you've gone through that process and designed it, then the actual work can begin of building it. And so I think that strategy process is important in impact investing, because it's this combination of what do we care about? And a lot of times that's, you know, SDGs are now a marvelous way of kind of looking at that and quantifying it, but what do we care about? Is it place-based? Is it issue-based? Is it both? And once you've identified that, then identifying what assets do we have available from a tax, estate, et cetera perspective, what assets do we have available to begin to move toward what we care about? And only then, when you've come up with that, do you start to put the plan in place akin to building a home that says, okay, let's implement and let's start investing. And so we find that I think it's that combination of clarity and confidence that once a family has been through that process, by the time they're ready to implement, they've got the clarity and confidence that this is a plan that's been designed for them and for the things that they care about and for the resources that they have. I will say that for many people, when you think about public and private, the public markets are the first entry point because public market assets can be deployed relatively efficiently, and the private markets typically take time. So, a typical application perhaps for a family is that assets can be deployed over 3, 6, 9 months in the public markets to become fully invested, where it may take a few years to thoughtfully look at funds and individual opportunities as they come up to put that portfolio together. But I'm a big believer that across the portfolio, there are opportunities for impact. Ironically, for us, the very last asset class that we invested for impact was cash. 10 years ago, there weren't many options available, but today I'm really proud of the fact that all of our incremental cash, the family office and through the foundation, are invested across both CDFIs in the US, responsible financial institutions across the world. So we're confident that even when we've got cash in transition, something that's getting paid out, et cetera, that those dollars are still thoughtfully going to work in ways that are impactful.
That's brilliant. And, you know, we often hear that folks don't know where to begin. And it sounds like, you know, from your experience, you can begin with cash if that's the easier step for an organization, particularly if there are other structural barriers to how they can go to deploy, as well as the time factor for those who want to activate quickly. Perhaps for place-based investors, particularly CDFIs could be a good close to home place to navigate through. So we did have one question from the listeners so far. It was about the use and limits of products and the structural issues related to how the world of financial investments work. So, you know, certainly we've talked about specialist advisors as part of the solution, but are there other solutions? And maybe certain things might not be available to folks depending on the amount of dollars they think that they have to be activated for impact.
So I think that in their well-intentioned desire to protect the public, regulators have limited very dramatically the ability for much of the public to access a lot of the private investments, certainly that are in our portfolio today. So most private fund investments, whether it be the impact space or the traditional world, are limited to clients with typically 5 million or more of investable assets. And not only are they limited to clients with 5 million or more, but often the minimum investments required for those clients or for those products can be 500,000, a million, or 2 million, which for many, even if they meet the requirement, might still be too large of an allocation to be justified for their portfolio. So try to do a couple of things there. The rules are, there's some things afoot to change the rules. Crowdfunding has been helpful, but you know, in the impact world, crowdfunding accesses a certain type of investment, but not certainly the entire product suite. At Impact Assets on the donor advised fund, we've created vehicles because we're investing off of one larger philanthropic balance sheet where someone could open up a $100,000 donor advised fund and invest in funds through Impact Assets that they would have otherwise needed 5 million and a million minimum to invest in. So for people thinking about using a philanthropic vehicle, a donor advised fund is a way to build a portfolio and access products you couldn't individually. And then at Aligned Impact, we've done a lot of collective vehicles. We've done collective vehicles for, if we've got 8 families that are all interested in a very similar issue. The most recent issue was racial justice, a fund called the Impact America Fund, run by a friend of ours who's doing wonderful work. And we put a number of families together in that so that we could meet a minimum investment and still make it an allocation decision that made sense financially for each one of the families. So that's it's an advantage I found for being part of a larger group, is a group of like-minded people with the right advisors can sometimes shepherd capital together.
Safety and power in numbers. So that is good to hear. And so we'll just move on to one of the final questions. We'll get to one more from the audience, but I'll ask mine first. You know, the world has obviously changed dramatically. You mentioned racial justice. Perhaps that wasn't even on the lips of many, even just a handful of years ago, though there are some leaders who've been working on those topics for quite some time. But as we think about the changes wrought by the pandemic and economic headwinds associated, you know, the world has changed even from the early days. There's new infrastructure, there's Aligned Impact and others in this work. And if we are going to be able to build back better and design for the next normal, you know, where from here for these who are listening in, clearly they're interested in making a difference. So, what advice do you have for folks who want to accelerate and not wait in their journey to really get going tomorrow?
Well, I will have to say, Monique, we're sitting here now in November of the year that seems to go on forever. If you'd asked me in March and April, I had some really serious concerns about the impact investing field in the near term, because we had, the COVID pandemic, we had a significant downturn in the financial markets. So we had a lot of economic uncertainty. And I was concerned as we looked into, across at 2020, is this going to cause folks who otherwise might have been inclined to become impact investors to kind of retrench back and say, we're just going to kind of see how this all comes together, the election, et cetera. And I'd say by summer, I completely changed. And obviously between spring and summer, we had the racial justice movement, the incredible movement with George Floyd and Black Lives Matter. But I would say since July, and it's become a groundswell, we have had more clients in our Align family, new clients that have come aboard, who have simply said, if not now, when? And if not me, who? And so I think that somehow in the impact investing field, and at least the small community that I'm involved in, it just kind of reached a tipping point. Whether I believe it was a combination of the incredibly disparate and tragic impact that COVID has had across socioeconomic lines, across communities of color, and then coupled with the racial justice and equality movement, we just simply had clients that said, I've waited a long time to think about doing this, and I want to now have as many of my resources as possible going toward the things I care about. And we've seen that we've seen it in our donor advised fund. Clients have increased charitable donations significantly, which is terrific, right? More philanthropy going out to good places. But at the same time, we've seen clients say, more charity is great, but it's not enough. I've got this other, much larger, in fact, in many cases, pool of resources over here, and it's time for me to think about activating it and putting those assets out to good use.
And so when we say good use, that brings us to the question that did come in from one of the listeners here. So when we think about the impact and measurability of that impact, for you, when you think about the impact rate of return, they mention Howard Buffett's impact rate of return for social impact investing methodology. For you personally, how do you go about tracking and ensuring that the real changes are happening? We hear this term in the field called impact washing, and folks on paper are saying that they're doing good things, but in reality, maybe some of those outcomes are not actually happening as we would like. So for you, what are your metrics and how do you think about that?
Yeah, no, it's a great question. And it's a question, Monique, I'm a little bit torn on. And I would love to, you have such great experience across so many sectors in this impact measurement area as well. But so first of all, I think that anybody who's in this field has to acknowledge that today impact measurement is still a combination of art and science, and probably will be for the foreseeable future, because the things that we're measuring are not as easy to measure as traditional financial concepts like revenue or EBITDA or profit. So that said, there are people who have said, I'm going to step back, I'm going to hold off becoming an impact investor until they really figure this measurement thing out and get it nailed. And that's a position that people can take. We've taken another position that says, no, there's, again, if not now, when? There are problems that need to be solved. We believe that our capital can help solve the problems, and we absolutely need to drive toward better measurement. So what do we look toward today? We're very supportive of the efforts of the GIN, the IRIS metrics. There's a lot of for those that aren't familiar, the IRIS metrics are kind of the FASB, if you will, of impact investing, trying to put some rigor around when we talk about creating a new job. Is it a livable wage job, for example, right? So when we're measuring things, trying to figure out how we're measuring consistently. We're big believers in the impact reporting that our funds do. your prior firm, who I love dearly, Tideline, has just come out with one of the first certifications now, independent certifications for funds. So there's a lot of good work happening. A lot of it's being driven by investors. And I would say this to asset owners: in the same way that clients drive change in private banks and wealth management firms, investors drive change in the asset management community. So investors, and particularly it's come from large European pension plans, who have said very clearly to a lot of the large fund managers, measuring impact is not an option. It's a requirement, and we're going to hold you to it, and we want to see improvement, and we want to see baselines being achieved. So there's good work going into it, and I think that the field is much farther advanced now than it was 5 years ago, and will be much further advanced again in another 5 years. And, again, we've gone past anecdote now to capturing numbers, whether it be carbon on the environmental side or social governance numbers on the S&G. And I just feel like we're going to get better at that. And I'm curious, because that's a field that you've spent so much time in. Do you have an additional take on that? What would your insights be there?
Well, I think to your point about outcomes focused, the outputs are one of the ways, but I think we should also think about qualitative. Certainly the impact weighted accounts effort of Sir Ronald Cohen and out of Harvard. There are others who are coming up with other methodologies for the public markets. Private markets, I think, to your point, perhaps are a little more opaque and harder to come by. But I think that some of the ways that the CDFIs have found to measure their efforts in community investing. So there are some folks who are actually quite sophisticated, and we shouldn't say that it's not there yet, but to your point, it's an evolutionary journey, since each kind of capital requires different sort of metrics and each asset class. So it's complicated to the power of, the number of asset classes we have and the impact themes. And I think we've counted something along the lines of 40 to just break it down. So it's a complicated part of the journey to understand true impact. But I think that there are advisors who are doing it, Tideline and others, and those who are trying to gain clarity around the things that we can know from the public market space are really helping bring clarity here to really understand the full impact. I think Heron's work, earlier on, to really think about net impact and introducing those terms to others, not siloing different things and ensuring that we are losing the forest for the trees because we're just counting the thing that we said we would count, but really understanding the ways that things percolate through an industry and the other levers that we have to both count, but also think about through the qualitative part as well. So I think there's something there, and we continue to evolve. And I think that that's an important part of being willing and open to saying that we're not there, but that doesn't mean one should not get started.
Yeah, I couldn't have said it better. And you mentioned as well early on the question about Howard Buffett. Howie Buffett is Warren Buffett's grandson. He's a professor at Columbia, and he's doing some really interesting work around impact measurement. And if there is ever literally a dictionary example of apples not falling far from trees, it's Howard Buffett. He's a brilliant young man who's, I think, just doing some really cool work that is going to become more and more appreciated in the field.
So we do have one more question that came in. This person was asking about advisors who don't even know that impact investing exists. So certainly those who've been long in the field might be surprised at that there's still some folks who are not so familiar and haven't heard of tools like C-Note to deliver on their goals. So I guess the question is, the learning journey is also for the advisors themselves, and there have been foundations, particularly some MIE members and others, who have essentially helped their advisors learn. What's your take on that? And for those who are working with some folks who don't yet know what impact investing is, maybe you could offer some advice.
So it's interesting. I started talking to advisors about this in 2007, 2008, and I was asked at an event last year to kind of reflect back on 10 plus years of being an advocate for impact investing for advisors. And the line that I used then, which I really think is true, is that I said 10 years ago when I'd get in front of a group, the main question would be, what is impact investing? And there'd be a lot of misconceptions. People say, oh, that's microfinance, or, oh, that's CDFIs. And it's this concept that, yes, it's all of the above. It's a much bigger umbrella, had yet to take on. By 2015, 5 years ago, most advisors, significantly all advisors, had kind of understood what it was, and advisors were starting to kind of say, okay, well, I get what it is, but why would I do it? And the line in 2015 that I heard a lot was, my clients aren't interested. You know, it's great that this impact investing thing, and then all of the surveys came out, and every major bank came out with a survey that indicated that typically more than half of their clients, and in some cases as many as 3/4, were interested. And so then it became very difficult for advisors to say, my clients aren't interested. It was clear that they just weren't talking to them. So they had no idea about their interest. And I would say now in 2020, the question I get most from advisors is, I get what it is, I get why I need to be doing it, but how do I do it? And the how is the tougher one, particularly within the infrastructure. So I would honestly say today, if I was talking to an asset owner and that asset owner said, my advisor doesn't know what impact investing is, I would have to honestly question, and I don't do this much because I love the advisor industry, but I would honestly have to question whether or not you're working with an advisor that's going to be able to take you where you need to go. Because there, to your point, Monique, there's an enormous amount of effort going on. Groups like Morningstar, US SIF, MMI, there are a myriad of opportunities for financial advisors to educate themselves. And obviously groups like Mission Investors Exchange cater to financial advisors that want to become part of the community and learn more and become more effective. And so I would suggest that if by 2020, an advisor has not made the decision to learn about this and figure out how to get educated, that's probably someone who is never going to get you to where you need to go. Fortunately, there are hundreds, if not thousands, of advisors that are well on the track, that are going through the process, and that are now trying to figure out, deciding, okay, this is something that I want to include in my practice, now trying to figure out how to do it, but there's some great work going on there. I think we lost your mic.
No, here we are.
Oh, there you go. Okay.
Sorry about that. So as we close, we only have a handful of minutes left. I wanted to make sure that we got a final thought from you. If there's one thing that you want folks to know and understand about, embarking on this journey or deepening a practice, what is it? And we'll make sure that we kind of etch that into a gilded plaque so that everyone can hang it on their wall and make sure they recall as they move forward.
I guess I would say, Monique, that it's kind of dawned on me over the time I've spent doing this that this is all part of a virtuous circle. I think that I've been fortunate, having sold my business, retired, had the time to be able to devote to this, that I think there's many people that are kind of looking for that circle of alignment, how you spend your time, what you advocate for, what you volunteer for, where you give your money away philanthropically, and how you invest the portfolio that you may have available to invest. There's a rhyme to all of that that's important. And I've really found that if you think about all of that collectively, there's a great power to being able to activate all of it together. I've built a remarkable social network just because I've continued to insert myself in communities of people that care about this, and found the incredible power of being part of those communities. And that has impacted positively the way in which we've made philanthropic grants and deployed assets other ways, and the advocacy work that we've done, both politically and issue oriented. So there's just this tendency sometimes to silo your life and say, okay, well, this is the part over here that I'm going to do good, and then this is the part over here I'm going to do something else. And I've really found that there's a 1 + 1 + 1 = 12 power that comes from trying to work it all together.
Well, that's fantastic, and we'll keep that on the plaque. 1 + 1 = 12. It's possible. And so with that, we will close, and I will bring Robert back on. And thank you so much, Ron, for joining us today and being part of this conversation. It's been really incredible to hear your journey and your insight.
Well, thank you for moderating.
Robert?
Monique, Ron, thank you so much for your insights and your thoughtfulness today. It's a pleasure to hear from both of you. And I have to say, on behalf of Philanthropy California, that was one of our best sessions yet. I also want to give a big shout out right now to all of Mission Investors Exchange, Monique, including Melanie Audette. Both you and Melanie have been instrumental in helping us develop great content for all of the members of Philanthropy California in our impact investing journey. So thank you all for being here. We look forward to seeing you again December 15th, where we'll be talking, surprisingly enough, about measurement of our portfolios. And the basic idea is all of you grant makers out there are really good at measuring the impact on your grants. And the question is going to be, how can we take that knowledge and apply that to start to measure the impact of our investments? And we're bringing some world-class experts in to help with that discussion. So thank you all. And here's to Carlos to close us out.
Thank you everyone for joining us today. Echo the comments Robert mentioned. Thank you to our speakers. My colleague Melissa will now share with us a poll. Friendly reminder that we appreciate your time to complete this poll so we can improve future programming. Additionally, in the chat channel, I'm going to add a link for an upcoming summit that's next Tuesday, Build Better, on Tuesday, November 17th. It is San Diego Grantmakers Summit being co-hosted with the San Diego Regional Economic Development Corporation. There'll be 4 sessions and a lot of conversations with leaders from business, investment, and philanthropy sharing their insights and saying what's new on the horizon and how we can work collaboratively towards building and resourcing an equitable economy. So check it out. The link is in the chat, and thank you again, everyone, for joining us. Take care.